if we're not going to enable international parties to come in and innovate, then we have to allow for it domestically.
Hello and welcome to another episode of the BetaKit podcast. I'm Rob Kennedy, and my co-host Douglas Soltis, editor-in-chief of BetaKit, is currently on a plane back from Traction in Vancouver. Traction, that is a good segue. Canadian FinTech companies haven't found a lot of it recently, with significant layoffs at companies like Wealthsimple, Clearco, and CoinSquare. It doesn't help that the bottom dropped out of Canadian FinTech funding in Q2 of this year. While global FinTech funding fell 33% quarter over quarter, in Canada that number was more like 75% and 70% year over year. But let's not forget that other component that makes scaling a Canadian FinTech company so difficult: competition. This week on the BetaKit podcast, we have Mohamad Sawwaf, co-founder and CEO of Manzil. Manzil is working hard to provide halal financial services to Canadian Muslims and claims to have some 12,000 families on a waitlist for those services. That is an incredible number and market opportunity given almost 2 million Muslims in Canada. The banks must be knocking down Mohamad's door looking to partner, right? Right. As Mohamad explains on the podcast, Manzil has been mostly shouldering the burden of building financial success to this demographic alone, running into multiple regulatory, compliance, and cultural roadblocks that don't exist in other markets like the UK, which already offer similar services. So what's a Canadian FinTech to do? And how is the current downturn impacting Manzil's chances for scale? Let's dig in.
All right, Mohamad, thank you so much for joining us. I think this is going to be a really interesting conversation that intersects with a lot of our interests on this podcast, but we have to start at the beginning. I think we need you to describe what Manzil's about, and I think we're going to have to talk about halal financial services a bit. So why don't we start at the beginning, break this down. What exactly does your company do, or what are you trying to do?
Yeah, absolutely, Doug. And thanks for having me on the show. So first and foremost, Manzil addresses a key gap in the marketplace right now where Canadian Muslims aren't allowed to participate in financial services that pay or receive interest. So when you think about the debt instruments that are out there, or even the investment instruments, GICs and bonds, that pay out interest, or, taking on a car financing or student loan or a home loan, these are all things that you'd have to pay into. And so in the tenets of Islam, because money has no value and everything has to be asset-based or asset-backed from a transaction perspective or trade-based finance, we can't participate in debt. And so Manzil has basically come to the forefront and said, we're here to structure these products that are not only compliant for their religious beliefs, but also compliant within the Canadian regulatory, legal, and tax systems to ensure, compliance on both ends, but of course, access to these financial services. Because, you have 2 million Canadians today that identify themselves as Muslim, growing to 3 million in the next 8 years. So it'll be about 8 to 9% of the population. And not only is it the fastest growing demographic, but it'll actually be the second largest religious base after Catholicism in Canada. And, here we have a niche market, a very strong one, yet they're financially excluding themselves from participating in financial services in Canada.
Okay, let's break this down a little bit, because that's a huge swath of Canadians. That's like, about 10%, give or take? Nice big round numbers. To my ears, it was like, whoa, can't participate in debt. That's great. I hate debt. That's bad. I don't want to be in debt. What are the impacts of these limitations on day-to-day life, right? Because again, we're a tech podcast. We've had tons of fintechs on. Particularly when we talk about fintech, we're usually talking about like financial instruments, and it all sounds very professional and things like that. But tying this down to like just like average everyday, before we hit record on this, we were talking a little bit about the Rogers outage and how that had impacted day-to-day Canadian living in a variety of different ways. What is the impact on this, religious adherence for Muslims in Canada if they don't have a alternative or a solution for this?
Yeah, let's focus on some of the stats here, right? According to Census Canada, Muslims have 50% less home ownership than the average Canadian. right? And in Canada and in the US, we'd all like to think that there's this Canadian or American dream that we'd all like to achieve with respect to homeownership. And so, when you think about it a little bit more granularly, there are a bunch of Muslims out there that are renting on purpose, not because they want to, right? But because they have to from a religious perspective. And when you think about what's happening today in the real estate market, right? Like prices have skyrocketed. There's a 1% vacancy rate in rentals. And now that interest rates have risen, nobody's buying and selling, like sales at their all-time low. And now what's happening is you have a rental market that is on fire. And so I tell people, I said, well, if you provided financing in a way that adheres to this religious base, then how much rental could you free up? Right? Because you have this whole set of population. I can tell you right now, Doug, the amount of people that are on my wait, I have 12,000 families on my wait list. That accounts to about $6 billion of required financing. These people have been renting for the last 15, 20, 25 years. And what they've been doing is just saving cash on the sidelines, uninvested, right? So we have now another problem is undeployed capital in the capital markets. They don't participate in investing. They don't participate in taking on, let's call it debt yielding instruments, bonds or GICs. And so you have billions, if not decades of billions of dollars sitting on the sidelines doing absolutely nothing. And it's not a matter of their balance sheets, I tell people. It's a matter of a lack of product in the marketplace that could enable this.
Simply, they just have no access to the kind of, again, I'm going to use the word facilities or just the pathways to home ownership or other things that other Canadians might take for granted, or maybe the financial system is set up to drive people towards, right?
Yeah, it's actually a bit of both, right? So when you think about some of the marketing initiatives that the big banks have done to attract other populations or communities, it's really around similar languages, similar marketing, same faces, same background, same colors.
Mm-hmm.
And I say, hey, okay, that's great, and I can understand you. And you have this marketing, and you're trying to attract me. Okay, I'm here now. I'm here. Can I get a Sharia compliant home financing product? And you're going to say no. Well, now you've lost me. You can't convert me at that point, right? The conversion stops at that point that I may ask for that question. And that's exactly what happened in my previous career is, I was working for these large institutions and I was trying to attract this community because I was building my book of business. And it was the same thing over and over again. And it's like, what do you have to offer that is halal? What do you have to offer that is Sharia compliant? And I'm like, nothing. And they're like, okay, well, come back to us when you do.
So just to be clear, you're driving up rent prices because they have to rent. They are probably paying higher prices because there's less vacancy. And are they unbanked ultimately? Because I mean, not that banks offer any interest of any value anyway, even if you are banked, but are these unbanked people with literally money at their houses that are not participating in any way? Is that where they're keeping their money, or how are they keeping their money?
They are either unbanked or they're underbanked, right? So again, let's talk statistics. There are currently 4 million Canadians today that are considered underbanked, which is at least 12% of the population.
Which means?
Well, underbanked meaning like maybe they just have a checking account.
Yeah.
Right? Like they're not fully participating, right?
They're not as liquid as most of the people that we write about on BetaKit.
Yeah. And then you have 1 million Canadians that are unbanked. People that are maybe in suburbia or rural where they don't really have, a bank branch, 50 miles away from them. Those are these people, right? And so obviously creating access via digital platform helps. But sometimes you actually need a different underlying structure or a product in order to accommodate them.
Okay, so let's talk about the accommodation, and maybe this is where we can talk about where Manzil comes in and maybe some of the financial services that you offer, because the underbanked is not an unfamiliar topic of conversation when it comes to like BetaKit's FinTech reporting, because we've written about what Coho's trying to do. We've also covered recently both theirs and Borrowell's credit building products, which are basically intentioned for certain Canadians who don't have access or to kind of some of the credit building opportunities others might have. So they're looking to do things in terms of, your rent contribution is a credit building tool, or honestly, you just give Coho $5 a month and that builds credit. Like they're just, different pathways to get the number up or to represent who you are and maybe your level of financial trustworthiness in a way that those people have access to, that hopefully the banks will accept. What kind of products, I guess, in the FI language, products are basically services relating to money, is Manzil offering to kind of handle it? Are you trying to be like a neobank of halal services?
Yeah, that's exactly it. Like, we consider Menzel as, the premier, Islamic neobank in Canada, right? Or neo financial institution. And we have a varied product shelf. We started off with our, let's call it, anchor product, which was a halal financing program for residential homes. And so we've basically created two structures that, on a partnership model or on a cost plus model, to basically enable home ownership amongst our community, right? We've turned renters into homeowners. And these are people that literally can walk across the street and actually get a mortgage from a bank. Like, they're not subprime credit worthy individuals. Like, these are professionals. Like, you'd be surprised how many doctors we have on our wait list that are renting. And we all know, right? Ontario doctors and kind of the typical incomes that they'd make.
They do okay.
They're doing pretty good. But again, it's a choice, right?
Mm-hmm. Yes. Mm-hmm. Through observance, they got to have a hand tied behind their back when it comes to accessibility here.
Yeah. So we have home financing product, and that product is actually supported by our mortgage fund, right? So what we did, again, when we thought about the landscape, we said, well, there's no, let's call it, halal fixed income investment opportunities. So why not enable this community to invest in a fixed income manner that basically supports a home financing program? So kind of like a peer-to-peer enabled platform that allows community members to invest via their TFSA, RSPs, you name it. That money then gets capitalized into a mortgage program. And then those mortgagees, as they make mortgage payments, ends up being the profit that is made back to those investors, right? So it was really an innovative 2-in-1 solution, right? So kind of hitting two birds with one stone. And then from there, you had alluded to already Coho. So Menzel has a partnership with Coho on the prepaid front. And when they introduced the credit building product, that was music to my ears, because, that was something that I had advocated for. And I'm glad, I hope that, my opinion mattered and that's kind of, that helped them move forward. But, that's one of the best, let's call it, features of that product that my community uses, because imagine us as a mortgage brokerage platform getting a doctor who rents and, comes to us, and his wife, say, a homemaker or a housewife, and he gives us a credit score that's bare. What do? Like, he has the income to support it. You have a down payment, yet, we've created this box to say, well, you need a minimum 680 credit score, right?
It's like you don't exist.
Yeah. So the partnership with Co has been fantastic with respect to just kind of enabling our customers to generate a credit report, right? Or build their credit score along the way. And then as we fast forward, we acquired an Islamic will company, right? So like halal estate planning is a thing. Yes, it is. Mm-hmm. There's a way to kind of set up your inheritance that is, abidance to the religion. And then, soon we'll be launching a few other products, right? So, we're going to be launching a new fund and, having access to more capital for our mortgage program, as well as, getting into, more of the wealth management and retail banking space with some partnerships that are underway as well. So, going back to, the original vision of, being this Islamic neobank, that's definitely, top of mind for us. And we really want to ensure that not only do Muslim Canadians have access to this, but you don't have to be Muslim, right, to access these products, right? You could come from any denomination, background, or creed.
Although, Wealth Simple seems like a really good.
No, it's a bad joke. We're fired and the podcast is over right now.
No, I'm fired. I shouldn't do marketing.
I was going to say, are there any additional considerations related to, or like I guess Islamic considerations for those other products that you're looking to offer, or is it more again like the same fundamental consideration, but the application per kind of financial use leads you to have to kind of like figure a new kind of meeting of the minds there?
Right. So on any financing transaction, or let's call it in the conventional world, a debt-based transaction, you have to structure, like I said, that's either asset-backed or asset-based. So for example, in our world, if you wanted to buy a house, we would have to come in as the financier and own the property for a short time of period or a long time of period as partners, right? Where you could just generally buy a sell. So think of like a general GPLP with kind of like a buyout structure. Or, we would buy this asset on your behalf, sell it back to you for a premium or a profit, and away you go, right? So there's really no involvement of money at the end of the day, right? We're trading assets here.
Gotcha. Okay.
And so that's the number one thing. When we think about the other side, so let's talk about like the wealth management, right? So, yes, there are rules around, what you are allowed to invest in and what you can't invest in. So for example, there's two sets of criteria. There's qualitative and then there's the quantitative. On the qualitative piece, we've all probably heard like, you can't, involve yourselves in companies that maybe, construct weapons. Or in entertainment and gambling and pornography. Like these are all bad things for society. They're sinful acts, right? So let's say, okay, yeah, you find XYZ company that's a technology company, and you're like, sure, like they're not doing anything wrong, right? They're avoiding all of these sinful activities. So that's check number one. Now what you have to do is actually dig into the balance sheet. Okay, so you're going to open up the balance sheet and you're going to look at three criteria. You're going to look at, are they involved in any impermissible activities? And if they are, is it more than 5% of their total income, right? So for example, they could have debt on the books. It's fine as long as it's less than 5% of the net income. They can have a debt to equity ratio of 33% or less, right? So we don't want to involve ourselves in highly levered institutions, right? And then, of course, there's also a liquidity ratio that you want to adhere to, because again, cash is considered kind of like non-asset class, right? So you look at the qualitative, then you dig deep and you go into the quantitative. And if all of those work out, you're good to go, right? So for example, for the longest time, and probably even including today, I've yet to check, but like Apple, right, was the largest market cap company and was by default halal to invest in for us as Muslims, right? So it's not like you have to find, very niche or particular type of companies to be like, oh, well, how big is this? The universe is large, right? Like I think of the S&P 500, 300 plus companies fall within the halal criteria.
Okay, so it's just a different framework of considerations that need to kind of be applied to make this stuff work for these people.
No different than ESG or SRI.
Okay,
that's out there.
I was just going to say exactly. Yeah.
All right, Rob, we're going to do something a little different. Normally, it's just me by myself reading some excellently crafted messaging from one of our sponsors. This is a little different. Why is that, Rob?
Well, we talked to our friends at ThinkSound, who have a pretty cool set of headphones.
Are you talking about the ThinkSound OV21s, Rob?
That is precisely the headphones I'm speaking of.
Is this a little bit of product placement on the BetaGit podcast? Our first ever product placement?
Yes, and I can hear you very clearly because I'm wearing the OV21s.
And we have been using these OV21s since we got them in a variety of different ways, but particularly on the podcast.
I mean, it sounds natural, right? It really sounds like you're talking to the person. At least when I'm listening, when we're doing our show, it feels like you're here. There's a presence to it.
Tell us how these high fidelity over-ear headphones with 45 millimeter dynamic drivers and passive noise isolation are feeling on that bald dome of yours.
I'm a big over-the-ear kind of person, and it feels good. It feels like it fits on my ears pretty well.
They're not heavy, really comfortable resting on your head, and that really matters for me as someone with horrible neck and back problems where any sort of weight on the dome, it dramatically impacts in any way. Having worn these for like hours straight, doing the podcast recording or just doing some like mixing of the podcast itself, it's just really comfy. You don't think about it, you don't worry about it. And I think for these kind of headphones, not worrying about these things being on your head is kind of like one of the best compliments you can give. The packaging is next level and really granola, which I super appreciate.
It's cool.
Even the little bag that it comes in, so that when it's in your carry-on, when you're traveling to Montreal for Startup Fest looking to do a podcast, none of the super fancy wires or the cups are getting damaged.
Yeah.
Might we suggest you head to thinksound.com.
Thinksound.com.
Check out the OV21s. And hey, tell them BetaKit sent you. Because it just sounds so good in your ears. We know that traditional financial institutions are based upon customer service. So when you were coming to them with these opportunities for their customers, they immediately responded to you like, oh yes, this is amazing. Because we love our customers so much, we would love to completely fundamentally change our approach to all of our financial products to support this small but growing demographic of Canadian citizens. That was the first meeting that you had, right? That was the room where it happened, and they were just like, yes, let's completely change all the pipes to this dying system that hasn't changed since we literally wrote this down, quill and pad.
Au contraire.
Okay.
And then Manzil shut down because it was done.
So obviously you had referenced this a little bit earlier that you had kind of been working in this space and being frustrated by not being able to service potential clients and spun out. Mm-hmm. We've talked to a lot on BetaKit, either on this podcast or just on the site, of a lot of challenger banks, neobanks, whomever, who are just so tired of. They are only challengers in the fact that they want the opportunity to offer a better service, like not even different service, just better services.
Yeah.
And FinTech is already an interesting space where like fundamentally, FinTech is usually just like doing the same thing, just digitally now and faster and less dumb.
.co.
Buy that domain right now. Manzil is actually quite interesting because you are in some ways doing things differently or with different considerations, but the intended outcome is more or less the same. What has your journey been like as kind of a neobank, challenger bank from an Islamic perspective when it comes to even speaking this language? Because I know from like, if you were just like the same old Scottish Protestants looking to create a digital bank doing the same old things, you find a hard road to hoe in Canada. I'm assuming for you it's been slightly more difficult.
Yeah, like let's break it down a bit. So when I embarked on this journey, this was back in 2017, right? And my co-founder Sam, went ahead and just put up a website over a weekend. And he comes to me Monday morning and he's like, I have to talk to you. And I'm like, what's going on? And he's like, I put this website up. And I'm like, okay. And he's like, but we have applicants. I'm like, what do you mean? He's like, people want a product. I'm like, but we don't have a product, right? Like for me, like, in the FinTech world, product is, something digital, right? You can see it. Product in our space, number one, is the actual underlying like documentation, like legal structure, right? Because if I don't have that, I have nothing to sell. People can come to me and then I have nothing to offer, right? That same, just like the analogy I gave to you with the person walking into the bank branch, right? You can attract me as much as you want with all of your words, but if you don't have an underlying structure, that's when I walk away. And he's like, Mohamad, you got to build a product. I'm like, but there's nobody here that's an expert that can do this from a law firm perspective, a consultancy firm perspective, an audit firm. Mm-hmm. He was like, figure it out. 2.5 years later, putting the best of the minds together, we figured it out. And that's when we launched Jan 1, 2020, right? But imagine if I was just like, hey, I just want to do mortgages digitally. Wouldn't have to do that. Like I could have fast tracked everything by 2.5 years, right?
Mm-hmm.
And now, like I tell people, I say, like, every time I'm talking to VCs or, any type of investment opportunity, I'm like, there's this separate bucket called legal fees. And it's not just the typical legal fees that these fintechs have to, buy into or pay into. There's, product structuring, there's additional regulatory compliance. Like I tell people, I say, we're doubly regulated, whether you like it or not. And they're like, what do you mean? I'm like, yeah, like we're regulated by FISRA and OSC, like the standard stuff. But I'm like, that stuff is A-okay until my Sharia board says, hey, you can't do that. Right? That's offside. And then it's like, okay, well, I got to change my ways to accommodate, right? Like these religious standards. And then that could conflict with the secular
Compliance. Yeah.
Yeah. And then so you're constantly in this kind of like negotiation where it's like, where is the best compromise, right? Between both. Where is the meeting of the minds?
Is there wiggle room there, or is it little hard and fast kind of binary? If it's not?
No. There's lots of wiggle room. And the good thing is we have best in class examples in other Commonwealth countries like the UK and Australia and the US
Yes.
that
Okay.
have these things established already. Like Canada on a G7 level is the furthest behind when it comes to this stuff.
Yes. I'm glad you're getting here, because I know when we first got connected, I guess it would have been in 2020.
Yes.
One of the first questions I had is like, are you truly inventing a new form of banking? Certainly they're like, looking at the demographics of the world, there are other places where the demographic breakdown, you would hope that would cater to these needs. So is it an issue of having to invent a wheel or apply it here? Like, can't you be coming with, obviously regulatory frameworks are different in between countries, but usually there's like a translatory period between like UK banking, North American banking. Like you might not be able to operate in that country specifically, but money can be transferred, dollars and cents can be exchanged here. But are you in a situation where you have to reinvent this stuff? And if so, why?
Islamic banks are out there. There's 1.8 billion Muslims, almost 25% of the world population. You go into Saudi Arabia, the United Arab Emirates, Kuwait, Qatar, Malaysia, Singapore. There are conventional banks and Islamic banks side by side. You have the freedom of choice and the option, right? Then you go into the UK and they have the exact same thing, right? So what I tell people is this isn't anything new. It's just new here. And you have to contextualize it to the regulatory frameworks, right? So, those home financing structures that I've spoken to you about, that's how it's done in 80% of the Islamic banking world, 90% of the Islamic banking world, right? Now, there are nuances because we have tax laws here. And, like, for example, in my cost plus mortgage, right? If Doug goes and says, I've just put an offer on this $500,000 house,
I wish.
and now Manzil has to buy it, right, on your behalf, I'm going to buy for 500,000. In theory, I have to pay land transfer tax, right? Because I've now owned this home. Now I have to sell it to you, Doug, for 750,000, and that $250,000 profit is what the implicit profit rate would be over the next 25 years, right? And so, you're going to pay $2,500 a month for 300 months. No problem. But now you, Doug, have to pay land transfer tax. I would have to pay capital gains because I just sold something from 500 to 750. And then the government says, well, you aren't using interest because that's a tax exempt income stream. We're going to charge you HST because it's a revenue or profit. That's what took 2.5 years to solve for.
Okay. So our legal system isn't set up to allow banking standards that are applicable in other parts of the world, basically.
Yeah. So what the UK instituted in 2003 was they came in. This is the regulators, right? Imagine like the OSC or the SEC, like came in, and it's the FCA in the UK. They said, we want to create an Islamic banking framework, and we will basically exempt you from these double taxation issues because we know at the end of the day you're just doing this to accommodate, right? You're not doing this for your benefit or for your gain at the end of the day, right?
Gotcha.
Yeah, and so they instituted that. So if there was political will at the top here in Canada, we could have this too.
Okay, so then to that question, I went on a very flowery rant that I'm very proud of about what your meetings with major financial institutions are possibly like, but based upon what you're saying, I'm wondering, are you going in there and they're like, this is insane, never, or they're like, we'd like to work with you, but you need to go convince the government to allow us to work with you. Where is the pressure point for you right now as you're looking to disperse these services? Because you said, I think specifically, you had about 12,000 people on your waiting list.
Mm-hmm.
Usually that's seen as like pent up demand. And at this point, it's not you not having a product available. I'm wondering if it's the liquidity to service that many people being interested. So I'm assuming there are still roadblocks here to do that. And I'm wondering what those are and where they're coming from.
Yeah, you're absolutely right. Like we have product market fit, right? We get almost $150 million a month of inbound inquiries, right, for our mortgage program. We don't actively market this product anymore because we just continually disappoint people that have now been on a wait list for 3. Now, it's not that we're not deploying capital, we are, but it's in the millions versus in the tens or hundreds of millions that we should be doing, right?
Why is that?
Because what we've done is attracted capital via the retail markets, like I said, through the community.
So other Muslims helping Muslims do this.
Gotcha. Exactly. And whereby the real capital is with the institutions. They're the ones that can offer 100, 200, $1 billion towards programs like this, right? If they wanted to. And so when we sit down with them, it's always, this chicken and an egg type situation, right? Now, we've told them that we've de-risked our program from the perspective of taxation and regulatory and compliance and risk. So they don't have to worry about that. Like everything that Manzil has done to date is completely unprecedented. It's never been done before, and we're always doing it for the first time. And
in Canada,
absolutely in Canada, and we're constantly proving people wrong, right? So here we are. We come to the table and we say, listen, we have a program in place. We have the demand. We've done some deals. We've piloted it. We've proven everybody wrong. Here's the best Bay Street lawyers that have opined on this and created our structures, for $1,200 an hour, and off to the races. We just want you, Mr. Bank, to give us, I don't know, start us off with a $50 million envelope, $100 million. Let's test the waters. Let's prove to you that there is this market, because what excuse do you have at that point?
And what is their response?
Their response is, come back to us when you have $100 million already, like, of transactions, and then we can talk.
Oh, okay. Now you're talking our language. This is find a US lead and the Canadian VC will follow on.
Exactly. Yeah, 100%.
Okay. What about international financing? Like, is that, because obviously there are other banks that are familiar with this process. They have it set up. Are you limited there in terms of like any other Canadian regulation that would prevent, some UK bank from providing that envelope to you here in Services Canada because maybe they're not licensed to operate in that way here or disperse those funds to you? What's preventing you from pulling, this is going to be a weird pull, but like a Tony Lacavera where it's like he couldn't find anyone to help him finance wind, so he just goes and just like to I think it was
Najib Sawiris from Egypt.
Yeah, and just like gets and that caused him problems down the road, even before he launched.
Yeah, well, and look where he's at, where they're at now. Like that just all came back, and then he left and said he'd never do this ever again, right? Because there was so many broken promises.
I think if we all had Tony Lacavera's problems, we'd be very happy with ourselves in life. Yeah. But like, is there something preventing you from taking that route, either strategically or from like a legal perspective or regulatory perspective?
So not that we're currently aware of. Like we do always hear about hedging risk, right, on the Forex side. They prefer everything was USD because most of the Gulf countries are pegged to the US dollar because of their oil. The UK again. So I think there's forex. I think there's how do you get the money over if you don't have like an entity already in Canada, and then there's always what we always hear is the withholding tax, right? From an investment perspective, right? Unless you're creating some convoluted special purpose vehicle structure, maybe through an entity or a country that has a tax treaty with Canada, blah, 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 right?
As a bootstrap media entity that doesn't want to take any money from any of the companies or investors that we cover, I'm very familiar with convoluted special purpose vehicle structures. And they are far too expensive for their worth, particularly if you're not looking to service ungodly sums of money. So that's understandable. Yep. So it's okay. And I got to push back on you for this because I think, your mission here is something that I think fundamentally us as Canadians can get behind. Every Canadian should have access to similar, if not like equal, if different services. But one time you're telling me the banks are like, we're going to wait until you find someone else and then we'll maybe back you. But then you're also telling me that there are maybe people that you could look to get money from, but there are still some regulatory or compliance restrictions probably preventing you from getting capital that would be more available. So is your biggest roadblock right now the Canadian Big Five banks who have no incentive to jump on this until it's proven that it's right, or the government preventing you from getting capital that is available like around the world right now?
Listen, I'm always about for the country. I'm very patriotic. I think that there is a non-willingness from the banks, right? Because let's think about it, right? I'm coming to the bank and saying, hey, I can get you prime A credit clients, right? That you can't get, but you would take them on, right? Like if you were to underwrite them, you would want them wholeheartedly, right? So you can't get them. And I'm actually charging them a premium, and they're willing to pay this faith-based premium for the time being because it's not available anywhere else. And you can establish like a 25-year relationship. However, you'd rather give money to maybe other mortgage shops that are subprime lending, right? And that's okay in your books, right? But because I have a different structure that everybody that's reviewed has said, this is from a risk perspective, a recourse perspective, a default perspective, in line with what all the institutions do. So where do your thoughts go at that point? I start to say, well, hey, is it because of the color of my skin? Is it because you don't want to appeal to this demographic or group? What is the actual roadblock here?
Gotcha. Okay.
And not to say, Doug, that we aren't dealing with other Canadian institutions, because we're still under NDA and working through kind of those contracts. So
I'm sure our listeners will read about that on BetaKit when such time as it is to.
Oh, absolutely. And they're not the big five, right? But there are smaller banks out there that look at this as an opportunity, because if we think about the current mortgage space right now, volumes are down. Like they're down heavy. They're down 60 to 80%, meaning like nobody's doing deals. How are you thinking outside the box now? Are you thinking outside the box? I can tell you a few are, because I've gotten those phone calls. And they say, hey, we remember. Are you still getting those originations that you used to tell us about?
Because they're looking for pent-up demand. Yes.
Well, what's happened now is they're promising their deposit takers 4 and 4.5% returns on GICs, but they can't provide it in an instrument that gets them a yield of 6% in order to provide. So they're if they don't deploy capital that's on their balance sheet earning 0% or less, how are they going to return that capital to deposit holders? They need to find origination somewhere. And we're starting to get those calls.
So let's look at this then from a slightly different lens. We've kind of like talked about like the religious cultural lens, and then like traditional financial institutions, or like the regulatory structures that might impede this. It's interesting to hear you say to me that kind of right now, because of the current environment, you're getting some interesting phone calls, because we're currently in an environment where we have reported on BetaKit from some CB Insights data. Literally, the bottom dropped out of Canadian FinTech in Q2 of this year, both in dollars deployed and total number of deals. It's very significant. I think it was like basically a 70% decline in total funding and something like a 20% decline in deals. Let's take it back to the past month. We've seen significant layoffs at Wealthsimple and Clearco. Just this week, Wealthsimple has been marked down. We covered layoffs at CoinSquare. There's a lot of FinTech companies in Canada that are getting squeezed on both sides because I would say the structures of their business don't look so great, whether it is in the lending space or in the crypto space, but also their target customer is getting absolutely kicked in the teeth right now because of those broader macroeconomic conditions. Are you saying that your target demographic is slightly inert from that because of the conditions that have prevented them from, like, if they've got the money sitting in their house because they can't bank on it, it didn't go away anywhere? Like, how are you seeing this current tech downturn, fintech bludgeoning that's happening? You know, we've said on this podcast previously, it's been a lot worse in the US than it has been in Canada. It's starting to get pretty bad in Canada. Are you, because you haven't had access to the capital that those other companies have had, you kind of are protected against that? Is now a really good time for you to be raising?
Yeah. So, I tell people we started officially Jan 1, 2020, and then 3 months later, the pandemic hit. So I feel like we've always, like, our company was born in recessionary times or pandemic times. And, we've raised a couple rounds, but we've been very, very prudent with that capital because we don't know when that next financing round is going to come and how big it might be.
To be honest, that's not really the type of capital that you need, right?
No, understandably so. And so when we think about our customers, right, well, they're debt averse, right? So number one, their finances are in pretty good shape to start with. Like,
They are not leveraged by definition.
they're not leveraged 100%, right? Your only liability is, let's say, the roof over your head, right? Your rent payment. And, some people do have mortgages. I'm not going to say that, all Muslims don't have a mortgage. Some people do.
Mm-hmm.
But, they're going to have a car that's completely paid for in cash. They're not going to have any other debt instruments or loan payments, right? So, that's working in their favor. But, what I've told in these institutions, and I'll tell you guys here, is now that valuations are coming down in the housing market, cash is king. We have actually a higher influx of individuals coming to us and saying, I would really love to buy now. Like, that same house that I had an eye on, is $200,000 less, $300,000 less. I don't care where interest rates go, right? But, my down payment is going to stretch further, right? Our program dictates a minimum 20% down payment. Our finance to value ratio, equivalent to a loan to value ratio, is 55%, meaning the average client on the Manzil books brings 45% of a down payment. And we're only doing deals in Ontario. We're not doing, rural. These are all metropolitan style deals, right? So very, very strong and astute, financially prudent Canadians. Every bank would want these people. And so when we think about the liquidity gap here and, the economics that come into play, interest rates have risen with price insensitivity. You have a bunch of people that are willing to buy, right? Sitting on a bunch of cash. Values are down. They want to deploy, right? There's dry powder out there in this market. Who wants to step in and take advantage of this opportunity?
So how are those phone calls going for you then?
Much more positive. They still take a long time because, again, Canada, right? Mm-hmm. I would say there are people now willing to say, okay, well, we could start you off with $100 million. We could start you off with $50 million. We'll start you off with $25 million. And I'm like, sure, let's play ball, right? Like, let's go through the process. Let's operationalize this. And, they have their ways of doing things, and we have to make it Sharia compliant, of course, because even the deals or the transaction structured between us and the bank has to be Sharia compliant, right? The flow of funds completely. So it takes time.
To maybe wrap it up then, as one of the, I think you're pointing to the need then for this tech. Do you have interest in building it, or are you hoping that it gets built if some of these frameworks are rolled out in Canada? Like, is one of the people you're on the phone with, Abraham Takjian, our new open banking lead, or are you not participating in that current movement?
So I would say internally, we are not only building legal structures that are unprecedented, we're also building tech to accommodate those legal structures, right? Because it is different, right? Are we participating in these open bank conversations? We've never been invited to the table. I'm happy to discuss these topics. I'm happy to provide my point of view because I think I bring a different point of view and I represent a different community that has different needs, right? And I think that needs to be brought to the table because Canada is a quilt of, a variety, right? Of backgrounds, of religions, of languages, of culture, and it's beautiful. And I constantly tell myself, and I tell people around me, I said, what Canada and the investment banking VC environment is doing is un-Canadian like. I've had conversations with US banks that are doing programs like mine, and they have come to me and said, "Hey, do you still have a 5-year mortgage market?" I said, "Yeah." I said, "Okay, nothing's changed since 40 years ago when I first looked at this."
Yeah.
Do you still have 12 regulators? Yeah. Okay, well, nothing's changed since I looked at this 40 years ago. And they know for a fact that if they try to apply for a Schedule 1 banking license, that they would not get it. And these are US banks, right? They've gone down this path, they've spent money, they've been rejected. And so if we're not going to enable international parties or institutions to come in and innovate, then we have to allow for it domestically.
Mohamad, it's been great talking with you today. I'm maybe looking forward to reconnecting later this fall when hopefully some of those conversations you're having are paying off and we can check in and see exactly what's changing.
Thanks, man.
The BetaKit podcast is produced by BetaKit Incorporated. It's edited by Katie Lohr, and its hosts are Rob Kennedy and me, Douglas Saltis. To learn more about how you can support this podcast, head to patreon.com/BetaKit.